Hello everyone, hope you had a great weekend. So in this video we are going to run you through all the weekly forecasts we have posted over the weekend to help you better understand what is our trading plan for the week, so you can prepare yourself and always plan ahead. Alright, so let's start off with the Euro US dollar. So the Euro US dollar has wiped out gains from the week before last, right? So sending the price back to a 9-month support at 1.1750. Alright, and this is mainly due to a robust US labor markets, or rather the NFP, that prompts the Fed to tighten their ultra-loose monetary policy and help strengthen the dollar. So the buying of the dollar is likely to continue as such, and we are expecting a temporary breakout of the current support level of 1.1750. So this may very well lead to a completion of a AB equals CD pattern in the weekly time frame, which I will show you in just a while. And that will bring the price back to test the major demand zone at 1.1620. Alright, so I mean, should the price breaks the current supports. So this week we will wait for a pullback from the support at the beginning of the week to look for a selling opportunity starting from 1.1800 and potentially 1.1850. Now our targets for selling will be at 1.1720 followed by 1.1640. So, but on the other hand, we also want to acknowledge that the Fed's the price is still supported at 1.1750, and that still gives the bulls an opportunity to reignite. Alright, so by looking at this chart itself, well, just now we did mention about AB equals to CD. So what we are actually referring to is this entire bearish wave, alright, may replicate, alright, as an AB onto the current bearish wave that eventually completes a CD. AB equals to CD, and that would mean in terms of the entire volume and duration taken to complete such a volume, and forming a AB equals to CD pattern like this before we see a stronger buying after the completion, and of course at the demand zone right here, which we also mentioned in the forecast as well, 1.1620 area. So, and therefore this is why these are the levels that we aim to take profit if we were to sell. Now we are also waiting for a pullback, right, before we actually try to sell again, because we anticipated that the dollar may continue to strengthen due to strengthening labor markets, and of course for the past few months inflation has been persistently high as well, prompting that the Fed will really have to tighten their monetary policy very soon. Alright, so the trading plan is really how did we come up with those numbers. One of the things that we always like to use Fibonacci. So based on the current bearish wave right here, from the swing high right here to the swing low, as you can see, we have put a Fibonacci from here, and the 61.8%, between 61.8% and the 50% retracement level, alright, has a very obvious supply zone, which we can consider to go for the sell again should the price pulls back to this level. As of right now, if we were to click on the play button, alright, because this is a Monday, we are still seeing support right here, but the price went out a little bit first, but it came out, so it is still essentially supported at 1.1750. So we got to wait for pullback first before we can actually look to sell. So maybe that might happen later on, but if it eventually goes even lower, then that would mean to say that it is going to complete essentially an ABCD pattern much earlier than we anticipated. Alright, so these are the things to take note of, and that's the trading plan for the Euro US dollar. Alright, moving on, we have the gold. So gold had the biggest drop in 7 weeks, wiping out all gains previously, and is now back to the 4-month support at 1760. Right, the gold has struggled to make any progress since it reached the height of 1830 and consolidated for more than 3 weeks, and it finally lost its grip amid a strengthening dollar due to a strong US labor market. Alright, so we have seen that the gold has been ranging for really quite a long time right here, and finally, you know, after multiple tests of the resistance right here at 1830, it finally lost its grip as the US dollar strengthened due to a strong robust labor markets in the US. So as of current, and despite a strong sell-off last Friday, the price is still seeing supported at the demand zone around 1750, and we might expect some significant rebound, alright, before further selling occurs. So we also want to take note that the US is also releasing its inflation data. Inflation plays a huge role in the gold prices should the price breaks below 1750 demand zone. Now otherwise, from a pure technicals perspective, we do see a potential for the gold to fall even deeper and potentially retest the 4-month low at 1680. And this week we'll wait for the pullback first, and from the recent bearish wave, and look for a selling opportunity from 1785 and as high as 1800. Alright, so coming back to the charts, alright, essentially we expect the price to fall even deeper and essentially reaching this area at 1780. So we are just waiting for pullback like something like here. Of course, the best I thought is somewhere around 1800 or 1795, because that is the neckline area. Alright, that will be the best price that we can attempt to sell again. Because at the end of the day, we are actually seeing something like this. The price, since it reaches the top, right, it has already fell very deeply, and essentially it has already formed multiple waves and completed this entire falling channel, and this channel has been broken anyway, with very strong bullish wave as well, and then it has pulled back once. So since the price is not able to go up from here anymore and it breaks down, then therefore we expect another pullback, right, and potentially retesting the low right here, which may form something like a double bottom. So this double bottom, if it forms right after the breakout of a falling channel like this, right, it might really be a very good opportunity for us to go to buy the gold again from such a low price, right? So that is essentially why we are looking to sell first, and eventually as it reaches 1680, we want to look for buying opportunity. All right, so but this week we thought that we will focus on selling, all right, since there's still quite a big chunk at the bottom for us to profit from should the market continues to fall. But in any case, alright, let's take out the drawing first, and let's just click on the play button, because what happened this morning, right, if you look at it, a very strong shadow right here, right. What happened this morning is that the gold price crashed all the way down to 1680. Alright, before any pullback even happens today, and yes, eventually it has already reached our targets based on the weekly forecast at the very beginning of the week. So right now we have seen the price already pull back very strongly. If you guys have actually attempted to buy at the bottom, right, essentially forming a double bottom right here, well, that will be a great news for you. But in any case, what should we focus right now? I think let's go and take a look at the gold charts. Alright, so if you take a look at the gold chart, we are seeing a very huge lower shadow forming right here, meaning to say there are strong buying happening right at the bottom as the price rebounded. Alright, buyers just keep coming in and the price just starts to keeps going higher. So I think right here, the first thing that we can actually do, is to pull out Fibonacci from the swing high to the swing low and look at what are some of the key levels to look out for. But essentially, just want you guys to understand that, alright, after this entire bearish wave, it has completed another wave. So again, an AB equals to CD pattern has already formed right here, but there will still be a possibility that the price may push back a little bit further, retest, right, and before it actually continues to go higher from here. Now let's just take away the drawings again, and let's go to a smaller time frame such as 1 hourly time frame. Alright, this is the current uptrend that we are seeing right now, the current rebound. So we want to see where can we actually go in again. Now as you can see, this is a inside bar formation, alright, where the previous bearish candle, alright, is very huge, and the next bullish candle right here is within the previous candle, and then the next candle actually starts to break higher. Alright, as you can see right now, the buying, alright, based on the candlestick, right, is taking many candles just to cover up the previous crash right here. But however, the growth is actually pretty steady, right? So we want to wait for pullback, All right, we want to wait for some form of pullback before we can continue to buy the gold, because I think the demand from the bottom right here is pretty real. Now, of course, on Wednesday we still have the inflation data, which I believe will still be persistently strong, and should inflation continues to be strong, that is actually a plus for the gold price. So if we were to pull out Fibonacci, all right, as of right now, all right, this is the 61.8% is still somewhere at 1708, but if the trend is really strong, usually we just look at the 38.2% just for now, right? And this is really just nice right at the top of the inside bar formation right here. So this is the price 1725 that you can look out for, all right, to look for a buying opportunity again for the gold. And should you buy, right, the first level, of course, coming back to the 1760, the previous low right here turning into a important resistance. And once it goes higher, of course, it can go all the way back to 1795 or essentially 1800. All right, will that happen? We are not so sure. But if, let's say, we already have such a big movement at the very beginning of the week, on the very first day in the morning or in the Asian markets, I believe we might have a lot more big swings and movement going into the week itself. All right, so that is all for the gold for now. Alright, next we have the NASDAQ. So NASDAQ continued to climb higher, but forming 3 consecutive bullish candle before finally turning bearish on last Friday. So we've seen that the NASDAQ has been climbing and finally started to make a turn. Now, interestingly, NASDAQ is the only US indices that's turned bearish, whereas both the Dow Jones and S&P were still bullish. And this is because NASDAQ is heavily fueled by stimulus and strong NFP data last Friday signals for a tightening of the monetary policy. So on the technical aspects, the NASDAQ has potentially completed the 5th motive wave of a bullish alert, and as well as repeating the same overall bullish pattern started in early September 2020, and thus signaling for a major correction to follow very soon. So this week we will continue to look for selling opportunities starting from the current price, but also expecting the price attempts to break higher again and potentially reaching 15,300. So should a major correction begins and price starts to fall quickly, our targets will be 14,600 demand zone and 14,100 demand zone at the bottom of a 11-month running channel. All right, so for the NASDAQ, it's really very straightforward. On the technical aspect, all right, we have already seen multiple alert wave forming right here, you know, and the last one being the current alert wave, bullish alert wave, completing the 5th alert wave right here. Price came down, went up, and finally we are seeing some reversal again. So and of course, due to the rising inflation, persistently high inflation, of course, very strong labor markets last Friday. And of course, if you look at the trend for the past few months, the labor markets has been recovering at a very amazing pace as well. So all of these are actually prompting the Fed to start tapering their monetary policy much earlier than expected, and that also means that the hot money will be reduced essentially, and that will pose risk to NASDAQ, because NASDAQ it's like an asset bubble in a way that is really fueled by stimulus, government stimulus. So if that happens, stimulus will be lesser, then of course NASDAQ will be at risk of, you know, doing a major correction. And of course, look at the technical aspect, a major correction is due as well, right? So with all that, we're really looking to sell the NASDAQ as much as possible, but we do not exclude a possibility that the price may still continue to climb even higher and breaking higher again before it really started to go down. So these are just, you know, some of the possibility we want to look at, and not just trying to sell and not looking at what may happen, what may go wrong, and how to actually deal with it. Alright, so the trading plan is as straightforward as what we have already mentioned. Alright, we are trying to sell, either we can start to sell right now, or if the price really went a little bit higher, we're expecting it to reach somewhere about 15,300 before we continue to sell from here. And of course, the target, right, the 2 demand zone right here, obviously important demand zone for us to take note of. So being the very first first level we want to take profit, and essentially the major level, or rather major demand zone, is somewhere right here, also at the bottom of a 11-month rising channel. Alright, next we have the WTI, alright, or rather the US oil. So WTI gained a little first and fell through the week by more than $6. That's pretty huge. So this is due to a surprise increase in the US oil inventories. Alright, showing it shows a positive data rather than negative. So when inventories actually increases for oil, it means demand has fallen, or supply has increased by very much. But of course it's the other way around. So showing that the Delta variants might have a huge impact in curbing the demand for oil. So at the same time, the OPEC Plus has also agreed, right, to increase oil supply and keep oil prices from going higher. So this is nothing new. Nevertheless, as most countries are opening up and many are determined not to go back into a full lockdown mode, economies will continue to recover and eventually lead to a more travelings and leading to a higher oil demand. So the oil is fundamentally strong, and we see that every dip in the price as an opportunity to buy at a lower price again. So the oil price is also technically supported by moving averages. Right, you can see the moving averages price has been supported by it, and it seems that the price will test the 126 moving average in the coming week, where we will be looking for a buying opportunity. The 126 moving average is this black color moving average right here. You are seeing the price is about to reach it already, and if it reaches here, that will also be at the previous resistance support level. Alright, pretty strong level. Alright, just right below the 61.8% Fibonacci retracement level, or rather in between 61.8 and 78.6%. A very good zone for us to look for buying opportunity. Alright, so once the price rebounds, we expect it to reach at least 71, and then followed by the previous high at 76. Right, because at the end of the day, economists, the fundamental that we just shared is that no, economies are not going to go back to a full lockdown mode unless something really too serious happen again. Which we doubt so for now, because most people are getting vaccinated. Right, that's one thing, at least for the major countries, right? So with that, we expect the economy to continue to recover, and therefore demand for oil will definitely increase as the recovery will lead to more travelings around, and of course a very fast increase in the demand of oil, and therefore oil prices will likely continue to go up. And if you look at the technical aspect, right, the price is still below the equilibrium of the 21st century. Meaning to say, the oil price is right now still below the average price of what it is based on the entire of the 21st century, right? Which is why the oil price has to go higher. Alright, so that's what we really mean, and therefore we are just looking for technical support and try to buy the dip for the WTI, because we know that into the future oil price has to go up. Alright, so it's very straightforward. And right now what's happening, if we click on the play button, oil price has already fell again, right? It's now about to reach the 126 moving average. Alright, so that will definitely give us an opportunity to buy. Of course, although we want to really buy, although there are some technical support right here, right, there's always a possibility price goes a little bit lower. All right, and eventually creating a much major pullback before it actually goes up. So if it goes out a little bit further, that would be understandable, and we just have to come up with a plan and to see how we can actually buy the dip even at an even better price, right? So that's the plan for the US oil. So lastly, we have the Bitcoin. So Bitcoin has turned out just the way we have forecast, putting back at first and eventually forming another bullish wave. Alright, so last week we did forecast a pullback, but it did not pull back as much as we thought. We were actually waiting for it to come at this level, but anyway, it's still pretty near, and then it really started to go up, forming a bullish wave. So this has been exactly what we have forecast for the week previously. Now, yes, even broken above the key resistance level at 42,000 over the weekend, and will certainly invite more buyers at this point. However, Bitcoin is about to face the real challenge, the key supply zone around the price of 50,000, right, which is right here, alright, shaded in red. And however, although we've seen how strong the recent rebound was, we have past records showing us the same kind of rebound after a major sell-off, which eventually led to another round of sell-off. Alright, so while we cannot guarantee that the same could happen, Bitcoin could still be fundamentally too soon for the next major bullish trend. Right, just think about it. Right, is Bitcoin considered expensive or cheap right now? Especially when it comes to the for the big players, right? I'll just read the sentence. We think the Bitcoin is still too expensive for another big players or players to make big purchases at the moment. So as such, we are still waiting for price to climb a little bit further. It is priced at 50,000 for the next major selling opportunity. What we're actually essentially trying to say is that while the price has been climbing pretty well, inviting a lot of buyers coming in, but we doubt that there will be any big players really coming in and buy at this moment, because it's not cheap at all, right? It's not cheap at all. And if I'm a big player, a big time investor, I don't want to buy at this price, that's for sure. So therefore, we are expecting that once it reaches this level, maybe there will be huge chunk of sold off by big investors or big players just to push the price all the way low, create panics, to sell the Bitcoin and eventually breaking lower. And once it breaks to a much lower price, a much desirable cheaper price, then we will really see big players coming in. So that is really what we think. And technically speaking, alright, the Bitcoin has completed this Edward wave. Price is now pulling back upwards, and this obviously is a very, very important supply zone. And honestly, that if we look all the way back to history, I forgot is in which year, maybe 2000 and just a couple of years ago, maybe 2018 or so. All right, there's something that's very similar happening right now as compared to the past. And anyway, I'm not going to show that. I'm not going to run through that, but just to let you know, okay, you can go and find out yourself. And therefore, we are very certain, we are very confident to actually try to sell within this region. All right, between the price of 46 or 47,000 to 51,000. All right, so that is the plan for the Bitcoin. Alright guys, so that's all for this week. Thank you so much for watching. If you like our forecast, do hit the like button and subscribe to our channel, and we will see you again in our midweek market.